Good day, Junior Tikkies. I'm Mrs. Brimacombe, and we are going to focus now on adjustment asset disposal. We're just going to revise the steps very quickly. Step number 1, take out the cost. So to take out the cost, it means the tangible asset, which could be vehicles, equipment, or even land and buildings, is credited and the asset disposal account is debited. That's why your assets minus owner's equity minus. Step number 2, update your depreciation. Accumulated depreciation is credited and the depreciation account is debited. Assets minus owner's equity minus. The third step, take out the total accumulated depreciation. And when I say the total, it means the balance in the beginning plus the updated depreciation. It means accumulated depreciation is debited, asset disposal is credited, and that's why your assets plus owner's equity plus. If I look at step number 4, we call it the selling price. We can dispose of the asset by selling it cash, then my details is bank, on credit, then debtors control, trade it in, then creditors control, the owner took it for personal use, then it's drawings, it was stolen, then it's accrued income or the insurance claim, donations, irrelevant of how we sold the asset. The asset disposal account is always credited and the rest is going to be debited. Step number 5, calculate if you made a profit or a loss on the sale of the asset. If we made a profit, it means the asset disposal is debited, profit on sale of asset is credited. Your owner's equity will be plus minus. Reminder, when we sell it for more than the book value, it means we made a profit. If we sell it for less than the book value, it means we made a loss. Then your asset disposal is credited and loss on disposal of asset is debited. Again, your effect on your accounting equation, owner's equity plus minus. Some tips. If you see asset disposal appears in the nominal account section in the pre-adjustment trial balance, it means that you only need to record the selling price so that you can calculate the profit or loss on the sale of the asset. Types of adjustments which you can expect grade 12 is to calculate the depreciation on the asset sold, make a correction, a building could have been destroyed, the insurance company paid out some of the money, theft of a vehicle or equipment. These are just some examples, damages, whatever the case may be. Then we need to write it off. We need to take it out. Looking at activity 21, show the effect on the accounting equation and indicate how it will appear in your financial statements. On the 1st of June 2020, sold a vehicle with a cost of $120,000 on credit for $80,000. On the 1st of March 2020, the cumulated depreciation was $48,000. Depreciation is calculated 20% using the diminishing balance method. So if my accounting period ends February 2021, it means it starts the March 2020. We have to calculate depreciation from the beginning of the accounting period until the day that we have sold it. So that's 3 months. Using the book value, we need to take cost $120,000 minus the accumulate in the beginning $48,000. And don't forget to times it by 3 divided by 12. So my total depreciation is $3,600. I'm going to start with the opening balances from the pre-adjustment trial balance. Vehicles, $650,000, accumulate $380,000. So going through the steps now. Step number 1, take out the cost. Vehicles is credited, asset disposal is debited. Step number 2, update your depreciation. accumulated depreciation on vehicles is credited, the depreciation account is debited. Step number 3, take out the total accumulated depreciation on the asset which we sold. That's the balance in the beginning plus the updated. So 48,000 plus 3,600, account credited, asset disposal. Step number 4, record the selling price. We sold it on credit. It means that debtors control would have been debited. If we sold it for more than the book value, it means that we made a profit on the sale of the asset, 11,600. So profit on disposal of asset is going to be credited with 11,600. To show the effect on the accounting equation, step 1, the cost, assets plus, owner's equity plus. Step 2, update the depreciation, assets minus, owner's equity minus. Step 3, take out the total accumulated depreciation, assets plus, owner's equity plus. Step 4, record the selling price, assets plus, owner's equity plus. And the last step, calculate profit or loss on the sale of disposal of asset. We made a profit, so owner's equity plus minus. Now, we've only calculated on the sold. Now we need to find out the remaining, the old. We need to use the book value. So this is the difficult one. How do I get the book value of the remaining? There's different ways to approach it. The method I use, we get the book value in the beginning minus the book value on the asset we disposed of in the beginning. This means 650,000 minus 380,000 is the book value in the beginning minus the book value on the asset which I disposed of in the beginning, 72,000, which we've already calculated, and now we can times it by 20%. So my depreciation on the old, the remaining at the end of the accounting period is 39,600. Accumulated depreciation on vehicles is going to be credited. At the end of the accounting period, my total depreciation for this year is the two added together, 43,200. Effect on the accounting equation, assets minus owner's equity minus. In my income statement, I will have depreciation, 43,200. The profit on disposal of asset is closed off to the profit and loss account, so it will appear as part of your other operating income, 11,600. When I look at what will appear in my balance sheet, in note number 3, the tangible asset note, we're going to start with the cost. So by looking at the cost, we're going to look at the vehicle account. The balance in the beginning, 650,000, minus the cost on the asset which I disposed of, 120,000, equals the cost at the end. Please take note, I've written it in brackets on top of disposal at carrying value. Accumulated depreciation, balance in the beginning, minus the total accumulated depreciation on the asset which I disposed of, which is 51,600, plus the depreciation, the total 43,200 equals the accumulate at the end. And now we can work out the carrying value, cost minus accumulate. My total movement, minus 68,400 minus 43,200, equals my movement. If I take the carrying value in the beginning minus the movement, it should equal the carrying value. If I calculate the cost minus accumulate at the end, it should equal exactly the same. In my balance sheet, on the face of the balance sheet, I'm going to have fixed assets at carrying value. Trade and other receivables, 80,000 for the debtors control, the asset which we disposed of on credit. If I look at the next activity, this is an example where a correction needs to be made. Calculate the following totals that will appear in your income statement for depreciation and loss of computer due to theft. So what happened here? Corrections must be made in respect of a computer that was stolen on 31 October 2020. The bookkeeper completed the following page in the fixed asset register using the incorrect method of depreciation. So he's calculated depreciation on cost. It should have been calculated 20% per annum on diminishing balance method. So all the steps were done 100% correctly. The only problem was the method in which the depreciation was calculated. So to calculate the depreciation should be calculated for 8 months on the book value. This means the book value in the beginning, 30,240 times 8 divided by 12 times 20%. My depreciation should have been 4,032. The total brought forward from the pre-adjustment trial balance is 124,260. We need to minus 1,568, and my new depreciation is 122,692. How did we get the 1,568? We took the 5,600, which was done incorrectly, and we subtracted it with the correct amount, 4,032. So we used the difference. Or you could have said the total from the pre-adjustment trial balance minus the total of the depreciation which was done incorrectly, and we add the correct amount. It will give you exactly the same answer. Remember, the question is asked in this format. It doesn't matter how you get to the answer. The question says, what should the depreciation be in your income statement? Looking at the loss of computer due to theft, there's different ways in which we can approach this. If we take the book value in the beginning and we minus the correct depreciation, it means my book value should now be 26,208. If we take that and we minus what the insurance company is going to pay us out or paid us out, 17,000, it equals my loss of computer due to theft, 9,208. This is one way of calculating it. The second way, we take the book value, 24,640, we add 1,568, the amount, the difference with the depreciation. On the credit side, we have the selling price, 17,000, and that will equal a loss of 9,208. Again, the way in which you get to the answer doesn't matter. So be aware of these type of adjustments. It could have been that also everything was done correctly, but the bookkeeper calculated the months incorrectly. Then you need to correct it. So to approach this, you can take out what was done incorrectly and add which was done correctly, or you can just use the difference. Thank you very much. I want to leave you with this quote: never stop fighting for your dreams. Next, we're going to look at adjustments where we've received the bank statement after the trial balance have been drawn up. I hope you have a wonderful day.